Something big is happening in the U.S. economy. Prices are soaring, debts are piling up, and warning signs are everywhere. Some say it's just a rough patch, but others fear something much worse. Which problems are the most serious? How could they affect your job, your savings, and your future? Today, we break down the 5 biggest economic crises happening right now, and the last one is something most people aren't ready for. Stay with me, because this is more important than ever. Let's start with number 5, the national debt crisis. Right now, the U.S. national debt has crossed $34 trillion, a number so massive that paying it off would mean every American owing over $100,000, and it's growing every second. This isn't just a number on a government spreadsheet. It affects everything: higher taxes, rising prices, and government cuts. The more the government borrows, the more it spends on interest instead of healthcare, education, or infrastructure. That money has to come from somewhere, often from taxpayers. Experts warn that as borrowing costs rise, the risk of an economic slowdown increases. If the government prints more money, inflation gets worse. If it cuts spending, businesses and jobs take a hit. Some say it's under control. Others fear a financial storm is building. How bad could it get? Now, let's look at the next crisis: inflation and cost of living. Every dollar feels weaker than it did a year ago. Grocery bills have surged. Rent is at record highs, and healthcare costs are climbing fast. For many families, basic necessities are turning into financial burdens. A gallon of milk, upper, a carton of eggs, higher than before. Gas prices, unpredictable. Meanwhile, wages haven't kept up, leaving millions struggling to afford what was once routine spending. Middle-class families are caught in a cycle where everything costs more, but paychecks stay the same. The Federal Reserve has tried to slow inflation by raising interest rates, but that makes borrowing more expensive. Mortgages, car loans, and credit cards all take a hit. If inflation isn't controlled soon, the impact could be long-lasting. Is there a way to fix this without triggering a recession? Now, on to the next crisis: the housing market crash warning. Owning a home feels impossible for millions of Americans. Mortgage rates have jumped past 7%, pushing monthly payments out of reach. Home prices remain high, yet sales are dropping fast. The market is stuck, too expensive to buy, too risky to sell. Sellers are holding onto properties, hoping for better days, while buyers are backing out, unable to afford the loans. In some cities, home prices have already started falling. The last time affordability was this bad, the 2008 crash followed soon after. But is this the same crisis all over again? Banks are stricter with loans now, but rising foreclosures and job cuts could change everything. If prices collapse, homeowners could see their property values sink overnight. Is this a temporary slowdown or the start of something much worse? Now let's move to the next crisis: banking and financial instability. Banks are showing signs of strain. And it's not just small ones. Mid-sized banks are struggling with losses, deposit withdrawals, and risky loans. Some have already failed, sending shockwaves through the financial system. Bigger banks aren't taking chances. They're making it harder to borrow money, raising interest rates, tightening lending rules, and pulling back on risky investments. Businesses are finding it tougher to expand, and everyday people are being denied loans they once easily qualified for. When banks stop lending, the economy slows down. If enough banks face trouble, a chain reaction could spread through the financial system. People could rush to pull their money out, businesses could fail, and the stock market could take a hit. Officials say the system is stable, but cracks are forming. Is another financial crisis around the corner? Now, on to the final crisis: the looming recession. Economic uncertainty is growing, and experts warn that a recession in 2025 is becoming more likely. Businesses are feeling the strain, cutting expenses, and putting expansion plans on hold. Major companies, from tech giants to retail chains, have already started layoffs. If this continues, unemployment could rise fast. For workers, this means fewer job opportunities, lower wages, and rising financial stress. Many families are already struggling with high costs, and a recession could push them closer to the edge. Savings will shrink, debts will grow, and even those with stable jobs may start feeling the pressure. The Federal Reserve is trying to control inflation without pushing the economy into a downturn, but the risk is growing. Some believe the slowdown will be mild, while others fear something much worse. How much worse could it get? The U.S. economy is facing serious challenges: skyrocketing debt, rising inflation, a housing market on edge, banking instability, and a looming recession. Each crisis carries risks,